Carvana have just dropped their earnings. Their earnings did come in above forecasts, and there have already been 7.2 million shares traded pre-market. So the stock is being super volatile. Want to cover some things first. We will go through their earnings. So firstly, just wanted to note what happened after hours yesterday. This move here happened because Carvana said they were going to move their earnings to this morning. So again, it meant they announced this after hours. There was no way to trade this with options as well. They announced it, and then obviously we now have our earnings come out this morning. Again, these did beat the estimates. That's why we've taken this news relatively bullish. And there are some key things that were released in the statement. So we'll run through all these right now. So Carvana had its best quarter in the company's history adjusted for EBITDA and total gross profit per unit. Now their total gross profit per unit was $6,520, which is a 94% increase year on year. Now, despite their record-breaking numbers, they have actually experienced a decrease in retail units sold, and that's by a decrease of 35%, and a revenue drop of 24% year on year. So that is, I would say, the only bad news that came out on here. But again, this I don't think is going to have a massive effect on the company, because when you look at this, the overall market environment is just not going to be as strong for, selling these cars. So that aspect kind of makes sense. But as long as they're able to boost their profit margins when markets go back to normal, then they are going to come out ahead. So that's why I don't think that bit was taken too much as bad news. Now, they have also achieved more than a $1.1 billion in annualized cost reductions in the last 12 months. So again, cutting their expenditures, increasing their profit margins, always going to be a great thing. And then lastly, Carvana reached an agreement with note holders representing over 90% of outstanding senior unsecured notes to reduce total debt and to extend maturities and lower near-term cash interest expenditures. Now, again, this is basically a debt restructure plan. This is always going to be good. They're trying to use the debt in the best way possible while paying out really as little as needed. So again, all taken as relatively good news, apart for, I guess, a decrease in retail units sold and the revenue decrease year on year. But now, to go over to those key levels, what are we paying attention to? Again, we do have the conference call coming out, obviously, before the market opens, but how I'm waiting until after this drops, after they finish the speech, before I start trading it. So what are the key levels? So we do have $45 and $42.30 now. These are actually now supports. Again, if we go back into here, obviously we've gapped above these levels, but these are key supports that I'm paying attention to. We can see we're holding the 45 really nice. We came back to test that. We are holding that. So we'll see how these act. But from a support side, we're looking at $45, $42.30, and $40.90 as kind of those key supports as of right now. If we start to break them, we then have $35 and we have $33.10. And if we crack those, these are going to be the super strong supports where even if it takes a few days to come down to, these are the ones that I'm really paying attention to. And that's going to be the $27.40 and the $21.20. The reason I like these levels is firstly, so the $21.20, you can see this is an anchored VWAP from their last earnings. So you not only do you have a deviational level, you've also got the anchored VWAP. Going to make it super strong. And then also at the $27.40, not only have you got the 6-month first deviation, but you've also got the anchored VWAP from when this big move and the volume really started to pick up. So should be quite an interesting level as well. So really paying attention to those as key supports on the downside. Now, the problem I have with this stock is the upside. And it's why I probably won't trade this long bias, because firstly, it's super extended. Whenever you're above these third deviations, it's very rare that you tend to hold above these levels. And even if you do, tends to be short-lived. So me knowing that, I don't really want to be taking these long bias. And the other reason I don't like taking them long bias is, where do I have the targets? There is no deviational levels for me to really have as targets. So yes, I could be looking at the pre-market highs and stuff like that, but that's not how I trade, so I don't really like looking at it like that. So that's why for me, Carvana, I'm only really looking at it from a short bias outlook. And again, I would be paying attention to the target stated below. If you're long biased, again, don't really have any key levels, just pre-market high. And then I guess you can zoom out and see if there's any other key levels that kind of pick your interest. But apart from that, I'm really paying attention to when the sell-off starts and paying attention to these supports, potential bounces on these levels. Or again, if we do push to these highs, I will probably look to get this short bias. Considering it's hard to borrow, I will be looking for a pure option strategy. So that might mean I buy outright puts, or vertical spreads will probably be the two ways I look to trade this. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.